Hey everybody, Boris from Forex. Welcome to the commodity dollar section for September 18 to September 22nd of 2017 for Aussie dollar, dollar CAD, and Kiwi dollar. And the commodity dollar story has, of course, been a little bit more tepid than the majors this week. Although we do have a couple of interesting event risks coming up on the calendar. Let's take a look at the calendar first. And then actually, you know what? Before we take a look at the calendar, let's take a look at just sort of the resistance and the support points here. Aussie 79 still support, resistance still 81. Caddy 120 still the absolutely critical support here with resistance at 124. And Kiwi, a very big story here that is really off calendar that I'll talk about in just 1 second, with 72 support, 73.50 resistance. Let's take a look at the calendar and just see what shows up, and then we'll look at the charts. So the major thing on the calendar here, we have the RBA meeting notes. That'll be interesting because, as I've talked about in the prior video, the whole idea here is the central bank moving towards a more tightening bias? If there is some sort of a hint here, we have a reasonable chance here for Aussie to stay and perhaps even trade through the above the 80, as 80 now becomes kind of what was former resistance, could now become new support as we go forward. On the Kiwi side, we have the GDP numbers coming up. I think it's on Wednesday. Yeah, here's the GDP numbers. That'll be interesting because it'll sort of inform the strength of the New Zealand economy. But the real big story with New Zealand is on Friday, or I think over the weekend, they have their election. The election originally was calling for Labour to upset the center-right government that is currently in place, the Nationals. If, however, in the latest polls, the center-right government has retaken a lead. But New Zealand, a tiny little country, 50,000 votes could flip the difference one way or the other. Polling, therefore, could be very inaccurate. It's going to be a big, big story. I would be very cautious in trading New Zealand into the weekend, next weekend, simply because we just don't know how the election will come out, unless you have a very, very firm view on how it's going to play out. If Labour wins, there'll certainly be a gap down because the market is going to view that as an unknown negative because of the center-left leanings of Labour. If Nationals win, there'll certainly be a little bit of a relief rally, probably a pop, maybe a more modest pop, but still a pop on the open on next Monday morning. So either way, I think caution to the wind as far as Kiwi goes because we have the political risk that is completely unhandicappable. And then last but not least, Caddy really doesn't have that much data on the books. I think we only have basically CPI data on the books here, but it's been trading really well. It's hard. It's certainly found huge amount of support or resistance depending on which way you look at it at the 120 level on dollar CAD, but it's still gunning for that level. And with oil creeping up to the $50 a barrel level, there's still power here to the Canadian dollar to the upside or dollar CAD to the downside. Let's take a look at the charts here and see how the commodity complex sort of shapes up. So first, let's look at the Aussie. Aussie, you know, this whole 80 level is clearly a big congestion level. But what is interesting here is, yeah, you know, we took out the 81s, came back down. Is that we're really, to me, this is a very, very key battle here that could determine a much longer directionality of the Aussie between the 79 and the 81, effectively, between the bulls and the bears. And it has not been resolved. It's sort of indeterminate at this point. There is a minor upward bias, of course, because you have a series of higher lows here, but it still looks very much as an overhead time, especially this kind of a flame out candle that we have against the 81s. Suggests there's a tremendous amount of resistance here against the Aussie towards the 81. And that's because of the caution of the RBA, because of even though the economy has been doing relatively well, it's sort of in a modest growth phase, and the market's still very much uncertain when and how the RBA is going to turn back to being restrictive rather than being accommodative. And that, in turn, is what's keeping a cap on the Aussie for the time being. If we go on the weeklies, though, we do see that this whole area, this whole 80-81 area, very, very key. We can take out this 81s. There's nothing here until about 83, and then really after that 85, right? So once we can clear 81s, we have a reasonable chance here to go into that whole 80-85 corridor with a big move up. On the weeklies, this is a very, very long-term positive base. If you look at this on a long-term basis here, the Aussie effectively looks like a buy because it's made a nice big W bottom with higher lows. So the only thing that would really invalidate this technical construct is if we broke all the way down below like sort of 73s. That would turn this whole W formation into a distribution top that could take us back down. But unless and until we get that, that's a very, very far level. For right now, you kind of have to assume that it's that even as if we sort of trade above the 78s, it still looks quite bullish. But the breakout trade, the truly big breakout trade, will be the 8150s. If we can take out 8150s, that will be the great trade because it would signal to us there's a potential here for 85 on the Aussie. Now, Kiwi, as I said, this is a weekly chart. It's basically 71.50 to 73 in the range. If we get the positive economic news, the positive political news that nationals win, there's a reasonable chance here we take out the 73.50s. That's going to put Kiwi into a pretty positive track back up towards the 75s. So I think nationals wins, we have a reasonable chance for 75s. Labor wins, depending on how strong and violent the reaction is, probably could be a move all the way down to possibly 70 as the market tries to figure out just how much of a change that will be in the New Zealand economy. So hard to, as I said, very hard to handicap that. I would stand back unless you have very strong political understanding of what's going on in New Zealand. And then last but not least, here's the caddy. Not much data except the CPI at the end of this week. But look, we're just really, this is a weekly chart. We're not bouncing. I mean, this is 120. This 120 really looked like a great support area, and it was. Buying, 2050 would have been a great buy for 150 points of retrace. But so far, this is no indication that we're showing any kind of a bottom right now because the Bank of Canada remains unremittingly hawkish, and that suggests and oil, crawling back up to 50. So unless you have some contradictory evidence, it's hard to really make the argument that you want to be buying this dip. It hasn't really shown. It's actually shown to be a very shallow dip and likely a test towards the 120. In some ways, I would say the interesting trade here is to simply go market with probably a stop at around, well, you'd have to give yourself a little bit of a wider stop. Let's just go in the dailies and I'll show you what I would think would be a reasonable stop. So yeah, I mean, the stop really would have to be up to the 2350s, 24s. Well, it's about 200-point stop. But if you go short here with a 24-point stop, and Canada does continue, you have a very reasonable chance here to test 20 because the next move to the downside, they're going to zero in on that 20 like you wouldn't believe. So it should be very interesting. I think Canada provides some interesting fireworks for us. New Zealand is a sideshow because of politics. And Aussie, we're watching for the 8150 breakout as a true signal to the upside move. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.